Let's get to our call of the day, our market analysis. A potential economic downturn has been a topic of discussion among economists, analysts, and investors since the pandemic recovery began. But continued growth and resilient consumers have kept fears at bay. Now, with a war raging between Israel and Hamas, Yardeni Research is saying that there is an increase in the risk of a recession by the end of next year. A note out from Ed Yardeni saying, quote, "The prospects of a prolonged war in the Middle East heighten the chance of a recession in the U.S. That's not our base case outlook, but we are raising the odds that we see of a recession before year end of 2024 to 30%. That's up from 25%. Now, Yardeni also saying that he does not see the war ending anytime soon and warns that Iran's involvement could raise the possibility of it spreading, leading to sanctions and higher oil prices, which could then in turn trigger a global recession. So, Brad, most of this call, based on the last two lines there that I read, what this means for potential sanctions on Iran, what that could then do to oil prices as a result. If we could see a move significantly over $100 a barrel, obviously that would put pressure not only here on the U.S., but globally speaking. That's all points to the potential here, the risk of a global recession. But he did point out that it is more likely that Saudi Arabia would increase production to keep that price below $100 a barrel.
You know, all this said, it really kind of harkens back to our discussion that we were having with the KPMG U.S. CEO, Paul Knopp, last week, who had said one of the biggest jumps that they had seen in their annual survey in terms of what CEOs are looking at and the risks to their business was in geopolitical tensions. And that jumped from number 7 in terms of political uncertainty all the way to number 1. And what they really were noting here in this shift is that CEOs have to come to grips with the fact that geopolitical risk is not only a short-term consideration, but in a fragmented world, CEOs have to become de facto political players as well here. And so that's going to be considerably interesting to watch play out here, especially given the risks that you were just mentioning and how this puts pressure on commodities that all of these businesses rely on, but then additionally where these businesses also have to make sure that they've got a pulse on not just the environments that they're operating in, but then additionally the consumer at the other end of that too. Plus, of course, there is still the human aspect that we should be starting and ending each of these conversations with, and that amazingly important. We heard that even in our discussion with the Pepsi CFO, Hugh Johnston, speaking about his SodaStream employees that are in Israel and them and those that are affected as of right now. And so continuing to keep a pulse on their own employees as well as understanding how to navigate through an environment like this too.